Hey guys, it is Pila here. Today I want us to look at volatility 75 and look at the opportunities that we might get on volatility 25. I'm sorry, 75, not 25. Uh yeah. Remember, always start from higher time frame when you analyze the market. You don't have to go to smaller time frame to try to understand what is happening on smaller time frame because of you'll find yourself making mistakes over and over and over. Therefore, let's begin. We start on a higher time frame. What is it that we want to see? We want to see where the market is coming from, right? As we check where the market is coming from, we then move to look at the market structure. Remember, here I'm just using Deriv trading view. The highest time frame that I have is only 24 hours. It means if I continue going down, I must go to a different time frame of which it is going to be volatility. I'm sorry, it's going to be 8 hour, not volatility, 8 hour. But before we go there, I just want you to see here what we have, a break of structure. Where the market is right now, or where's the market coming from right now? It is coming from that break of structure from daily chart. Remember, what I want you to understand is that even if you go to smaller time frame, you realize that there's an entry or you realize that the market is going down because there you see your breaker structure. And then what else do you see? A continuation pattern there. It means the higher the chance that the market will push to the downside. Therefore, what is it that we're supposed to do right now in this situation? We move to smaller time frame. What is it that we want to do on smaller time frame? We want to see where the market is and why the market is there. What is the market planning to do so that we can take decisions based on the direction of the current trend, right? So if you zoom in here, you realize that here you have a support level. The market reacted on the support level. What does that mean? It means the market will push a little bit back up. If the market push a little bit back up, what do we get? A trend line that was also broken. The higher the chance that the market will move up to test what? The trend line that was broken. Here is our trend line. We only have two touches. On the third touch, they tried to break the market, but they did go up to test the breaker structure there, of which is our what? Our support there. It became a resistance on the right hand side. Whatever that we have that was left unattended, it is the continuation pattern that you see over there on 8 hour chart. Now, noticing that the market is coming from this support, it means the market must go up. As the market is going up, what do you see again? A break of structure here. This is your support. Your support was broken on the right hand side. So if they break the support on the right hand side, it means the higher the chance that the market will go back up to the break of structure. Now, what do we do? It means we have to wait for the market to come back to this zone. Now, what is it we have? This is 8 hour. What is it we have that shows that the market will change the direction? You have a support that was broken. It's going to become a resistance. It means the market will go down. We have a trend line that was broken. It means the market will go down. The trend line was a buy trend line. The trend line was broken. It means those who are trading support and resistance are looking for what? Are looking for sell opportunity there. Remember, we have traders that are trading support and resistance. We have traders that are trading trend lines. All of them, they are looking for the same direction. Therefore, what is it that you have to do? You have to wait for the market to come back to this level. Do not create opportunities here if you missed your entry there. Wait for the market to go up so that you can sell. You look for opportunities to buy here, the market might come down. You will find yourself taking losses that you're not supposed to take in the market. Therefore, you have to avoid jumping on the middle of the trend. So what we're going to do now, because of we know what is the market planning to do, we then move to 4 hour chart. You see that the market is currently on what? On the support level. The market is trying to react on the support level. There's nothing that we can do. But bear in mind, as much as the market will try to react here, the market will try to react here. If the market breaks below, we wait for the market to go down. We know that this support, now it was broken. We have to wait for the market to come back and test so that we can enter based on the direction of the market. But now you can't take any decision here. Wait for the market to break above so that you can be out there looking for opportunities. Remember, you are expecting the market to go up to do what? To test the trend line that was broken. And then we continue with the downtrend. So it is not safe for anyone to take a decision to jump on a moving trend right now. It is not safe. Bear in mind, it is not safe. So what is it we're going to do? We will continue moving to the downside with the time frames just to check what is happening. Remember, you know that the market is pushing to the downside. If you apply the line chart, I want to show you how you identify the trend if it is going up or down. I said this is what you're going to see as the market was going up. The market will create a higher. And then once they break the low here below, it means the market is no longer going where? It's no longer going up. Hence, you can see this low was broken here. This is 4 hour. That's a confirmation that we're going to push the market down. You wait for the market to go up. Now, this is where you get your breaker structure. They will push the market higher to the trend line that was broken, and then they change the direction. If you look closer, here is your continuation pattern and the trend line that was broken. They push the market to the breaker structure. You get your entry, you go down with the market now. Okay, no problem. Let's go to the candlesticks. Now, if you are approaching your market, you come across things like this, you don't have to rush. You just wait and observe. We are going for 2 hour chart right now. On 2 hour chart, this is what we also have. Your trend line needs to, your resistance needs to be adjusted. It's going to look like this now. So if you look closer on 2 hour chart, this is your trend line. First time touch, second time touch. This is your entry. The market went up, it came back to the trend line. It went higher to test what? This support that was broken here, and they left a continuation pattern. That's your entry. The market came back to break the trend line. The trend line was never tested. In market here too, it is coming from the support level. Where is the market headed? The market is headed towards the trend line. Now, in this situation, what is it that you do again? You wait. Hence, I said you wait. Isn't it that you missed your entry on the third touch here? Since when you miss your entry, you have to wait for the market to come back and give you an entry point so that you can enter based on the direction of the market. Always remember, the more you create opportunities that are not there in the market, that's when you'll have difficulties. The more you're out there creating opportunities, now I feel like the market will continue to the downside. I feel like the market will continue to the upside. You'll have problems because of it is not safe for you to enter here. Where are you going to place your stop loss? Guys, bear in mind, there is a place where you're supposed to enter with low risk. You enter, the market goes to your direction, or else you just go to your stop loss, then you're done. There's nothing that you can do. Your job is to just wait for the market to come to you so that you can take decisions that are corresponding with the direction of the market. Again, we need to move to smaller time frame. This is 2 hour. We're moving to 1 hour. On 1 hour, this is what we see on 1 hour. Now, I said when the market is going up, we rely on what? On the previous trend. This is our previous trend. What is it that we have here that was left unattended? You see, oh, okay, and then it was tested by this candlestick. I see a trend line that was broken. It was never tested. I see a PCP. It was never tested. Therefore, this zone has the higher chance that the market will go and reverse it. So yazi so prepared so qedile. Now you check again ukuthi anginayo yini i-break structure. Do we have a structure that was broken here? Yes, this is the support. It was tested here. It was broken. It was tested by this candlestick that tested this continuation pattern. Therefore, the higher the chance the market will move to the upside. Now, as the market is moving up, I have a resistance there. Let's verify if the resistance was tested or not. My resistance was also tested as they were creating the continuation pattern. They went to test the resistance. Now, we move to the right-hand side. We're going to have a new resistance here. If we have a new resistance here, it means they will come back and respect the resistance here. But them respecting the resistance, they will push the market with a wick. We do have chances that they don't reach the trend line because of the continuation pattern and the break of structure as well. Now you know which decision to take. You jump in here, you buy, you will lose. You jump in here, you'll sell, you'll still lose. Where are you going to place your stop loss if you enter here right now? Fine. Let's move to smaller time frame for control. It's okay. Let's go to 30 minutes. I just want to show you more information and also how to approach the market from here. So you grab your trend line, you push it all the way up. Once they break this trend line, they are no longer going up. That's what you can do for yourself. Once they break this trend line, you know that, okay, I'm going to get my entry. They break my trend line. They will come back and test the trend line, show that we are pushing to the downside. And then they come back and test the trend line. You enter, you go down with the market. But do not bother yourself to look for an end right now. What you can do, you can just observe and do nothing. The only thing that you can do is to observe and do nothing. You see, there's a trend line there. The market might come down to that trend line. The market might come down to that trend line. What can you do? Nothing. So for you to be safe in this scenario or in this situation, you have to wait for the market to break so that you can say, oh, okay, now we have broken our trend line. The market is going down. Oh, now I can see we have broken the previous trend. Oh, it's going down. You see, you do that for yourself, you'll see or you'll understand what is happening in the market. But you're out there creating opportunities. I feel like the market's gonna go down. I feel like the market's gonna go up. You'll have a problem. You will have a problem because of whenever you approach the market, you need to know what you are doing. You need to know what you are trading. Once you master knowing what you are trading in the market, there's nothing that will stand on your way. But if you're out there, you don't know, you are just assuming you know what's going to happen to you. Hence, I said that we don't come to the market and assume if the market's going to go down or the market's going to go up. You open your chart, you observe, oh, okay, the market is roughly here. What is it that I have to do now? You have to wait and observe what the market is doing. You'll enter, the market will go up, expecting a sell, the market will go up. You'll enter expecting a buy, the market will come down. Roughly, we have a continuation pattern here. We have a continuation pattern here. The market might go up because already you do have the signs of an uptrend here. Can you see that this high was broken? The market created a high. The market created another higher high. The market created another higher high. That's a sign that the market is going up. But for you to be safe, wait for the market to come back roughly on the resistance or on the continuation pattern or on the break of structure. You will know which decision to do or which decision to take there. Again, if you come across my YouTube video for the first time, do not forget to like and subscribe. Do not forget to like and subscribe and also leave a comment of a pair that you want me to analyze for you. I am willing to analyze the market every day and post it for you. So if there's a pair that you want me to analyze, please feel free to leave a comment so that I can analyze that pair for you and also post it as well.